and welcome. You're watching the Facebook studios at Raisina Dialogues, and we are here to talk about something that all of us have now got used to hearing, phrase which is described as the end of cash. Well, this and also how digital technology is going to impact consumers, governments, and of course economies as well. In the interest of time, and because I have such a stellar panel, I'll let you hear from them yourselves. Let me just introduce them. There's Arvind Gupta, founder member iSPIRT. Also joining us, Jeremy Sturchio, Vice President, Head of Government Relations, Asia Pacific Visa. Thanks so much for your time and your participation here. I want to start by asking with the same question, and Arvind, I'll let you go first. We keep hearing about going cashless and this whole great transition to digital. What does it really mean? Does it mean end of cold hard cash as we've known it?
I think first we have to recognize that cash is the most expensive instrument out there today. But why it has been prevalent is because it's the easiest to use. You give somebody 100 rupees, the other person receives 100 rupees, and that's the reason the cash has been very prevalent. But it's the most expensive from the banks to the government, the cost of printing, the cost of supply chain to getting it to the cash dispersal points, security around it, ATMs, tellers. It's a very expensive proposition, but still cash is there. And when you say end of cash or cashless, I've always said it's less cash. And to me, end of cash means, or less cash economy means that there is less dependence on cash.
I see.
Which basically means I can do a transaction in the absence of cash in a digital mode. So I'm not dependent on cash to fulfill my daily needs, my transactions, and that is the path to what is endless end of cash and a less cash economy. I mean, I'm not going to get into the benefits of it, but of course, this is the least expensive. A digital transaction, a mobile transaction is, of course, lot, I mean 100 times probably less expensive than doing a money transaction.
Right.
But the whole issue of cash, and we can discuss the issues around it, it has been the trust involved in exchanging 100 rupees has been very, very high, and that's what we are fighting.
Yeah, right. And there are also, of course, maybe cultural sensitivities as well, perhaps. We just feel sort of closer to cash in a sense.
Yes. So
you can see it, you can feel it.
You can look and feel,
yeah.
But you have to remember, as I said, first of all, it's very expensive, and secondly, if it's all ending up in a banking transaction, for example, it's a zero value add. It goes out, and then the money is been withdrawn for an ATM, and probably being put back in a bank somewhere.
Yeah.
So the it's created economic value, but the money movement has costed a lot of people a lot of lot of money. So the point I'm trying to make here, the limited point I'm trying to make here is, of course there is trust, there is a cultural issue there, but to us and to me, end of cash would mean that I'm zero dependent on that, and I have confidence that I can walk around with the instrument, whether it's a credit card or a debit card or my mobile phone, and equally live about my life on a daily basis while making the transaction without using cash.
Got it, got it. That's sort of well articulated. Jeremy, let me just tweak that for you. When and not if do you sort of see this happening?
Well, I would thank you, Natasha. It's a pleasure to be here, and I would agree with Arvind. It's not a matter. The objective, I think, when we talk about cashless, is not to completely eliminate cash. So would agree that just to assure everyone, the question is, when is digital a better way to pay? And we're finding in many cases it is, for all the reasons that Arvind stated. But fundamental to a digital transaction is also trust. If you're going to take away the physical, assurity that comes with seeing, touching, feeling, and you have to have trust that the transaction, that you're providing, your account will be charged accurately, the merchant will receive the money, that they asked for. So all of that underpins the system. But when we think about better ways, I think that gets to the crucial part that you mentioned at the beginning in terms of a future of money. What does a future look like? And that's about innovation. So I was thinking just before we sat down here, cash has been around for tens of thousands, at least 10,000 years. And then it's only had one innovation, in all that time. When the printing press came along, you know, instead of just coins, now you have notes. But not much has changed since then. I think if you look at the payments industry and the digital, the broader, but more than that, payments is one piece of a value chain in a digital economy. And that's, I think, the larger conversation. But bringing it back to payments particularly, you've seen in the past 5, and I would even say 2 years, hundreds, if not thousands of innovations, because that's how fast the technology is driving the capabilities.
Got it.
And then the next piece becomes, what are the right use cases? And then what are the right ways in which to coordinate so much opportunity and so much capability? Where is it best channeled to serve the needs of consumers?
Got it. You mentioned innovation, and I sort of just want to sort of get more on that from you. How can the incumbents innovate? Because there's a lot of disruption happening from other players, the new players. What about the incumbent like yourself? So how does innovation there look like?
Yes, yes, thank you. So it's a two-way street. Visa's mission is to connect individuals, businesses, and economies so they can thrive. It's not to make sure that everyone uses a Visa card, although that's how we deliver on our mission, and that's how our business grows. But one of the things that we do is we operate in more than 200 countries and territories around the world, and we operate through our clients. So we're not a bank, but we facilitate the exchange of the information, and we facilitate the money movement for the end customers at either end of a transaction, whether you're a buyer or a seller. Through all the relationships we have as a global network, we learn a lot, right? So we learn what we learn in one market, we can apply in another, but we also know that no two markets are the same. So what we try to do is aggregate the learnings we take from different markets, use the best of them, see where we can pattern recognize, connect the dots, and try to bring that technology. But when we bring it into a local context. And I should mention, I'd be remiss if I didn't say, here in India is our second largest research and development facility. So many of these global solutions that I'm referring to are actually made and developed here in India, not only for the India market, but then they're applied in other parts of the world. That's the first one. And just, I know we're short on time, but the second point is crucial here, and this is, I think Arvind would agree. Visa is a large company. Our business is payments and payments technology and enabling digital commerce. But as big as we are, we don't have all the answers. And it's crucial that we find a way to be responsible partners with all the other participants that are coming into this market, because there's so many ideas. And so we're trying to be very thoughtful in looking at and partnering with anyone who has a good idea to figure out what are our capabilities, what are your ideas, how might those two things come together in terms of a solution. And that's a really exciting opportunity.
Got it. Arvind, talking about innovation in India, UPI is of course now being hailed globally, and you've had quite a ringside view to see how that's played out. But what next? How would you like to see it being leveraged? How would you sort of like it to take India forward leaps and bounds?
See, first of all, I think the lesson from the India story has been, I always talk about it, the innovation that is happening in India, number one is at scale, speed, it's open innovation. Now what does it mean? It's not owned, this technology is not proprietary that can be only owned and managed by a private player. It's available for public good, and that I think has inverted the pyramid, and that's India's innovation platform, which is it serves everybody in the pyramid. It's not only meant to serve the top few. If you have 260 million households in India, the bottom 200 million which were denied access to banking, you can say, access to anything digital, can be served by these platforms. I think that's the future that India has shown the world, that you can innovate for the next 6 billion, and how you can innovate for the poorest of the poor, and they can be part of the digital inclusion, financial inclusion. Jan Dhan is a great example of the low-cost bank accounts. The future of innovation to me, number one is that's solving societal problems, bottom of the pyramid. Second, I think data. And coming, a lot of things that we are doing today, the platforms by itself become free. But the data that exhaust that they produce will really make decision making, AI on top of it, decide a lot of things. Credit, for example. And that I think will open up a lot more opportunities, economic opportunities for everybody. Three, I always say this, and I'm going to continue to say this, we'll have a lot more banking, a lot
See.
less banks. And I think
Interesting, yeah.
banking will come to your doorstep.
see.
You know, that is already happening. India is showing this. The postal bank, the postman has transformed into a bank now. So it's a walking bank. And so those are the kind of things that that we see. And lastly, I think something that is India's real contribution is very less rent seeking, almost close to zero, can really result in volumes going up. So bit sizing of transactions can really make your volume growth. A case in point that you talk about, and you know, we really are proud of the UPI. 3 years UPI from 100,000 transactions a month has moved to 1.3 billion transactions a month now. I mean, that kind of growth you don't see on any platforms anywhere in the world. So that's a great example of how bit sizing transactions can result in volumes that you have never seen before.
You touched upon something that I just want to sort of get your thoughts more on, and that is, you talked about access. Now there are 1.7 billion globally unbanked people. So do you believe that it's moves like this, it's technology at the end of the day that is going to make sure that inclusion is just not just a phrase or not just a buzzword, but we actually deliver on it?
Absolutely, Natasha. I think again, I'll go back to the Jan Dhan accounts. I think technology was an enabler that brought down the cost of customer acquisition and made banking available to everybody. The biggest hindrance was, and any telecom and banking executive will tell you, the cost of customer onboarding has been way too high. And then servicing that customer on an ongoing basis makes the 1.7 billion consumers who are unbanked so far globally not viable from a banking perspective, from a business model perspective. Once you bring down the cost of customer acquisition and the cost of servicing those customers, and digital helps a lot, that you know, that makes banking inclusive and can make banking inclusive, onboarding very cheap. And I think India's example is being talked about everywhere. How 370 million plus people opened bank account in a very short span of time, and continue to use the same.
Jeremy, sorry.
No, I just build on that, if I could, to
sure.
say that, you know, I agree wholeheartedly, and Visa was honored to be invited by the World Bank several years ago to contribute to the goal to increase financial inclusion by 500 million. So we made a commitment to help contribute to that. But it's one thing to aim high with big targets and numbers, and it's crucial to kind of have that ambition. What we learned in the process is even more valuable, which is it's not just about saying someone has an account. We know that, you know, if you really want to see that economic boost and that improvement in livelihood, it's about usage of the account.
Absolutely.
Is it actually of value? Is it utility? And that's where the crucial piece comes in terms of what's being provided. And we find that these things, the technology is helping us move faster and reach more people than ever before, but we can't forego the hard work of being very deliberate and thoughtful in understanding the needs of the end customer at the end of the day.
Right.
And one last point to what Arvind said about data. It just occurred to me that, you know, one of the things that data is enabling is actually payment transaction data can be now used as a proxy to help underwrite lending in a way that previously you would have had to show up with some sort of tangible collateral.
Right.
But in fact, this payment data may provide sufficient information for banks to be able to lend more, particularly to small and medium-sized businesses.
Right.
That's a very good nudge for people to get into digital platforms.
Right.
It involves a little bit of literacy for SMEs and shopkeepers and traders, but once they get it, they understand that there's a big value and in onboarding themselves in digital payments.
Got it. Well, unbelievably, and I thought we just begun, but it seems that we're completely out of time. But Arvind, Jeremy, thanks so much for your time. It's really been a pleasure have you speak to us here. Well, on that note, it's a wrap. So keep your thoughts coming in. Thanks for watching. Goodbye.
Thank you.
Thank you.